So I had a question recently via my newsletter, which, by the way, you should join if you're not already on. And the person who was responding to my newsletter was asking me about dividend investing and what my thoughts were. Because in the past I've made it clear in my newsletter that I'm not a dividend investor and I don't really ever see myself being one. So I thought it was a great question. I thought it'd be worth its own little video, just to lay out some of the pros and cons of dividend investing as I see it. Now, I do just want to say, if you are a dividend investor, this isn't a stab at your investing approach. It's just more to cover why I don't think it's the right method for me. And generally, I actually don't think it's the right method for most people. But it can be effective, and I want to talk about that. So I just want to quickly start with my investing philosophy, especially because I know it's a little bit different to what a lot of people are used to seeing on YouTube. And it also just generally walks the line between a couple of very different popular methods. So my default position is generally this. So 1, global index fund, all the money goes straight into that, 100% equities. 2, sit on it. Number 3 is where it gets complicated, and that's if I see a really good opportunity, I'll take some of that money and allocate it to that specific opportunity. Now that could be a specific sector that I think is going to go through a boom, it could be a specific company that I've identified or a commodity. It just really depends on what I've identified. But I'm happy to go in with a relatively high proportion of my investments, and as you'll be aware of currently, a very high proportion of my investments are in one particular investment, with the idea being that I only need to outperform by a few percent for a short period of time and then flip back to a global index fund, and that can have a massive boost on my portfolio in the long term. So now I've just got that out of the way, I want to start with what I consider are the pros to dividend investing, because I think there are some really good pros that need to be discussed and acknowledged. I think the very first reason why I think dividend investing can be a really good idea for someone is that there are lots of small milestones when you're dividend investing. If you're a global index fund investor, you might be waiting for the next £50,000 or the next whatever the big milestone is, but those milestones are often quite a long way apart. Whereas for a dividend investor, you'll get dividends paid fairly regularly. Depending on the companies you're invested in, you might get some monthly dividends, or they might be quarterly or slightly less frequently than that. But that means month to month you can track your dividend income from your portfolio. And often you'll see, because I love watching people on YouTube who do dividend investing, even though it's not my cup of tea, you can see their charts going nicely up in a nice linear fashion up and to the right. And that's really encouraging to see. And it can really help gamify investing in terms of you want to strive for a little bit more money coming in dividends the next month, or you want to get to the next whole share of a particular company that you're invested in. And I think by gamifying it like that, you can force yourself to invest more money than you otherwise probably would have done, and that can have a really good long-term benefit on your portfolio, especially as that money starts to compound on itself. There is only one downside to this, and that's that I think when we try and sort of gamify investing, because it can be quite boring and probably should be quite boring, is that it can encourage people to overtrade, and that can incur spread fees or transaction fees that otherwise wouldn't have been required, and that's money leaving your pocket and going into a broker's pocket. But generally, I don't see too many people falling into that trap from the dividend investors that I watch. And it's personally really exciting as a viewer to watch it going up, so it must be really exciting for those who have those dividend portfolios to track it month to month and see the numbers going up. I think the second reason, as a pro for dividend investing, is that you can apply other tilts. So dividends might be one way of screening your investable world. So you might say that I'm only going to invest in a company if they yield effectively at least 2%, say, for example. And there are many other ways to factor invest that I'm also a fan of. A particular one is quality factor investing. So maybe a quick shout out here, there are some YouTube channels that cover this kind of topic, and perhaps one of my favourites is Tom's Personal Finance, and he is a particularly big fan of factor investing, and I am, but I particularly would focus on quality. And so if you mix quality and dividends, you can get some really good results. Now, it doesn't have to be a factor like what's known as the more conventional factors. It could be a grouping of dividend stocks. So for example, there's the Dividend Aristocrats, which is a collection of companies based in the US. And to be a dividend aristocrat, you've got to have increased your dividend every year for at least 25 years. Now, if you were invested in the Dividend Aristocrats for the last 20 years, you'd have actually outperformed the S&P 500 if you used that as a benchmark by 1.2% annualized over a 20-year period. And so that can show that maybe dividends is a potential factor that you could screen for to help try and increase your performance. Now, I will just also point out, with when I say that, don't all just pile into Dividend Aristocrats, because actually over the shorter term, they've underperformed the market quite significantly. I don't know how long that will go on for. So now I just want to flip the video and start looking at the cons. And so in my mind, these are the reasons that seem to outweigh those positives that we've just talked about, because beyond those two that we've talked about, I can't really see many other positives. Maybe I'm wrong, and it'd be great if you could drop some comments down below if there's other things that are reasons why you dividend invest and don't just say buy an index fund that tracks the whole market. But the first reason I see against dividend investing is just the time required. So this specifically applies to those who pick individual companies to invest in, rather than just say using a dividend yield ETF. So for example, Vanguard do a product, or Schwab do a particularly popular ETF known as SCHD. So what do I mean by that time commitment? Well, personally, when I'm getting into an investment, I like to read the quarterly filings, the annual filings, I like to read transcripts of earning calls. There's all kinds of different things that I'll try and do to understand that company as well as I can. Because if I don't understand those things, why am I investing in that company? And to be honest, without it being like a full-time job, I don't think I could manage more than 5, potentially maybe towards 10 if the companies aren't particularly dynamic in what they do and don't change that much. But beyond that, I just really can't see that you've got the time to do the thorough analysis required to pick individual companies. And so if you're not doing that thorough analysis and you're maybe just applying a very broad blanket filter on the yield of a company, do you really know what you're buying? To me, that's getting closer to gambling, and that's not an investing technique I'd condone. Now, obviously, there'll be dividend investors out there who have had the time to put in, and that's fine. I completely respect that. And if you've got the conviction to go into those positions, then great, because that's the same thing that I've done with my portfolio recently. As I've been documenting on this channel, you'll see I'm heavily invested in one particular position at the moment, and that's because I've done some research and I've got some conviction in that position. And the second reason for me against dividend investing is the market exposure and the opportunity cost. Now, I think this is particularly shown especially over the last, say, sort of 10 years or so. So we've seen over this time especially that big tech has outperformed pretty much everything else. And big tech doesn't really pay a dividend. They'll do some share buybacks, but mostly they're using that money that they earn and reinvesting it in their own company to grow. And that's because there's market share to be gained in that industry. The whole industry as a sector is growing really fast as well. Whereas most of the common companies you'll see in dividend portfolios are more in the financials and the utilities. And these are sectors that just don't have the same room to grow. So it makes more sense for those companies to just distribute their earnings to shareholders. Whereas companies in higher growth areas, it makes much more sense to reinvest in their company to grow the company. And so if you're only focusing on the dividend payers, you're missing out on some of these other sectors that could get you great growth potential and really help your portfolio in the long run. I think the final reason, and this is one of the ones that really tips it for me, is the transaction costs. So if you're not invested in one of these accumulation ETFs that buys a basket of companies and reinvests the dividends, and instead you're picking individual companies, are you aware of some of those hidden costs that you're paying? Now, probably a load of you are screaming at the screen right now saying, but I use a commission-free broker. But that doesn't mean you're not paying costs. I think a particular one that people forget about is the spread fees. So when you get paid a dividend, you'll then use that dividend to go and buy some more shares in a particular company or a particular ETF. And every time you make that transaction, you're getting a little spread fee cost that's just baked into that. And so you're giving money from your pocket into a broker's pocket every time you do those transactions. Another cost that particularly the UK dividend investors that I see just don't take account of is withholding tax costs. So even if your investments are wrapped up in an ISA, I particularly see this in the world of REITs, is that UK investors don't realise they're already foregoing 15% of the dividends. So the UK has a tax treaty with the US. If you filled out your W8BEN form, your withholding tax is reduced from 30 to 15%. But that's 15% of the dividends in every US company you receive dividends from that you never see. And so where I said earlier that the dividend aristocrats have performed really well over 20 years, well, imagine if you now strip out 15% of the dividends you've received, you'll see a very different picture to the one that outperformed. Now, I don't want this to be like a super negative video on dividend investing, because I think there are some really valid reasons why people might dividend invest, but it's just not for me. I don't think I can really see a position in the future where it will be an investing technique that I'll follow. Now, maybe something will come up that will completely change my mind, but at the moment I just can't see that happening. And so that's really why I don't invest in dividends. And so I hope that's been clear, and I'd love to hear some of your comments in the description below. Feel free to disagree with me if you're a dividend investor, but tell me why. And as always, thanks very much for watching.